Happy Wednesday out there, folks. This is Darius Dale here to present our macro minute for Wednesday, June 1st, 2022. Starting with asset markets, we have stocks up this morning, commodities mixed with crude oil leading, crypto down, dollar flat, global bond yields up. Market moving headlines, we got Jay Powell has the green light to usher in a hard landing if need be. So him and President Biden and Treasury Secretary Janet Yellen, they had a quote unquote rare meeting with the in the White House yesterday in which President Biden affirmed to respect the central bank's independence, saying, I'm not going to interfere in critically important work. We take this as a signal that Biden is not going to be like President Trump in interfering, or at least rhetorically interfering with the central bank's work, particularly in terms of inflation fighting. So that means if Jay Powell has to usher in a hard landing, he will be given the green light by the White House to do so, at least per this statement. Number two, welcome to QT. So today marks the official start of the Fed's quantitative tightening program. They are in the process of shrinking their balance sheet. We're not going to get anything until the runoff, from a runoff perspective, until coincidentally the June 15th Fed meeting when 15 billion treasuries mature. Until then, would have to kind of wait. So it doesn't officially start today, but it will start, and they're going to try to get up to our peak rate of quantitative tightening that we observed in 2018. Basically, is by the end of the month. So that's pretty interesting. And they're obviously going to double it from there. So brace yourselves. That's not going to feel good. So semiconductor supply chain disruptions are largely unchanged, according to Susquehanna. Chip lead times, in terms of the amount of time it takes from order to delivery of chips, semiconductors, is 27 weeks. That's really largely unchanged from April. So not getting worse at the margin, but obviously it tells you that inflation, some of the things that are causing inflation, are not crashing to the downside to perpetuate a crash in inflation statistics. That is an issue as it relates to this sort of quote unquote September pause dynamic that Bostic has introduced into the market in recent weeks. And then lastly, I thought this was a really important statistic as it relates to the likely specter for further sanctions in the Russia-Ukraine conflict. The world is practically paying for Putin's war. If you look at energy sales alone year to date, and this is data from Bloomberg, they're up 285 billion year to date, which is more than the amount of sanctions that have been applied to Russian oil and gas and other commodities this year. So I do believe that if we continue to see aggression in Ukraine, that we're likely to see incremental sanctions. Obviously, the EU banned 2/3 of Russian oil imports, or at least agreed to do so. We're very much likely to continue to see deterioration on that front, absent a sea change and a mea culpa by Vladimir Putin, which obviously seems to be a near zero probability at this current juncture. And then lastly, big movers, not much going on in financial markets this morning. U.S. dollar 1 year, 1 month forward overnight index swap forwards. So that's just the price of where the market expects the Fed funds rate to be a year from now, to average average in the month a year from now. They're up 5 basis points to 3.02%. They're actually down 30 basis points month over month. And part of this is going back to what we heard from Bostic and others. Really just Bostic who sort of introduced that thought into the market early May. This concept of pausing in September, et cetera, et cetera. We think if they pause in September, it's probably not going to feel good for risk assets. They're not just going to get to September and pause. If inflation hasn't come down, and according to our models, is very unlikely to get to a place by then to where they're comfortable pausing, it's very likely that we have to see something from a financial conditions tightening perspective, or from a growth cycle slowing perspective, which obviously would cause financial conditions to tighten to get them to pause. So you can't have your cake and eat it too out there, bulls. I know you want to, but unfortunately, that's not how the world works. Shifting gears to our volatility, just a momentum signals and probable range processes. U.S. dollar index is still bullish fam, still oversold here. Gold still bearish VAMs, bouncing off the upper boundary with probable range with a minus 3.3% of downside to the lower boundary. 10-year nominal treasury yield bullish VAM still bouncing off the lower boundary with its probable range of 24 basis points of upside. You notice that slope starting to turn a little bit, so keep an eye on that. High yield OIS bullish VAMs, credit spreads still at the lower boundary with probable range with 88 basis points of upside. S&P 500, that is bearish VAM, still hugging the upper boundary of its probable range with minus 10.6% of downside. I talked about this morning on Twitter about the sort of gamma penning associated with the 4,200 level, chunky call expiries, chunky put expiries at 44,000. So it's going to be difficult for the market to break out above 4,200 or break down below 4,100 into June OPEX. That's a couple weeks from now, or exactly 16 days from now. So you could see some frustration, some consternation, chopping both bulls and bears up in the interim. But again, guess what happens after June OPEX? Q2 earnings season. I'm guessing, just given the guidance we've seen some of these large retailers, it ain't going to be pretty. But that's just our view on the profit cycle. You might have a different view, and if you have a different view, then the best of luck to you. VIX still neutral VAMs in the middle of the probable range there. And NASDAQ 100 is bearish VAMs. Everything I said about S&P 500, you can translate to the NASDAQ. Russell 2000, same thing, bearish VAMs, still hodling the upper boundary of its probable range. Again, you might chop bulls and bears up again in equities for the next few weeks. But again, the medium-term path of least resistance is very much to the downside, given our views on the growth cycle and the liquidity cycle. Bitcoin still bearish VAM, still at the upper boundary of its probable range with 18% of downside, trading like a pure risk asset. I like looking at Bitcoin here as opposed to some of the option market dynamics that might be sending some mixed messages in the equity market for now. Bearish VAMs, Ethereum still minus 5% of upside versus 18% of downside. Shanghai Composite still breaking out to neutral VAMs recently, still hodling near the upper boundary of its probable range, just minus 4.7% of downside. WTI crude oil bullish VAM still. Wrote about that in lead off morning note in terms of our outlook for crude, or revised outlook for crude oil. So check that out. Right in the middle of its probable range with 7% of downside versus 8% of upside. And then lastly, agricultural neutral VAMs getting close to the lower boundary of its probable range, but still 1.1% of downside, 6.2% of upside. Industrial metals, bearish VAMs bouncing off the lower upper boundary of its probable range with 6.5% of downside. So with that, Darius Dale presenting our macro minute for Wednesday, June 1st, 2022. And for those of you who are 42 Macro Bundle subscribers, we'll have Andreas Steno Larsen on today's program today. So very excited to get his take on the evolving European inflation dynamics, evolving ECB policy dynamics, and just general thoughts on the European economy. I know a lot of folks don't focus on that. So we're very excited for that. So tune in today at 11 a.m. Eastern. Subscribe or upgrade if you'd like to participate. Cheers.